Alrighty. Good morning, guys, and happy Monday. Welcome back to the best game going. What's up, Lee? What's up, Mirza? Good morning, Lorna. Lona. Got a southern accent all of a sudden this morning. Good morning, Tony. What's up, Mike? Good morning, brother Riley. All right, guys, we will jump in. Little heads up, I'm kind of under the weather, so I shall keep this short and sweet, and then I will cut you loose. And for those of you in the options room, I'll be on the mic there for the open. But we'll jump in here. S&P futures up 0.7%. Little bit of greenage. The QQQ futures up 0.33%. We've got the Russell up about 0.6 and the Dow. The Dow futures up about 0.7. So a little pop here this morning. And first observation, at least on the futures, we got ourselves a lot of lower time frame buy signals. So on the Dow, Big 3 indicator is bullish on the 2-hour down to the 5-minute, which in plain English means your 2-hour down to the 5-minute. You got a little bit of bullish trend and structure going. Let's see, buy signals on the NQ. A little bit more barren, 1 hour and a 30-minute. The Russell, in case you guys trade the Russell futures, we got some buy signals, 1 hour, 30, 15, 5-minute. And then, of course, the big dog, the S&Ps, we have buy signals on the 1 hour through the 5-minute. So that is certainly an improvement, guys. It's an improvement from where we found ourselves back here, hanging out at 3,600 with sell signals across every time frame. So a little bit of progress, and now the two questions are, one, can the bulls keep the progress? And of course, I got a busy week coming up. We've got Apple earnings, Amazon earnings, I believe Microsoft and Google. We're going to hear from a couple of our buddies at the Fed. So a lot of outside catalysts this week. But that's the first big question. They've made a little bit of progress. Can they keep the progress? Question number 2. They can keep the progress. Potentially in the short term, could we see a bit of a rally, maybe up towards that daily 50 SMA? For sake of conversation, we'll call it 3,900. So that's the question, guys. Does this all turn into something similar to what we had back here in August, where you actually got a really nice, sustainable rally? Or does it all kind of unfold a bit more like early September? Trap the shorts, they pop it, they try to rebuild, then it fails. You kind of have the same thing back here, and we've seen that failure over and over again. So those are the two questions. Can they keep the progress? And if they can keep it, in the short term, could we potentially grind up towards that daily 50? And that is of interest to us for two reasons. One, if we're going to rally towards 3,900, there should be a couple of nice trades to play along the way. But then, of course, bigger picture, I think the S&P is at 3,900, or let's call it 3,900 to 4K. I think it's a great spot to short the market because none of the bigger picture problems have changed. So for now, guys, it's all short term. Focusing on the lower time frames, and by doing so in the short term, looking for a potential path towards 3,900. Bigger picture, of course, still looking to short the bounces. So as far as the pieces of the puzzle, and I should have my notes here. Let me see. Yeah, so we put this together, I think it was last weekend in the Mastery group, the recipe for a move to the daily 50. So as far as the market goes, we got to get those two official closes back above that daily 21. So the S&Ps, they cranked out one on Friday. One, not two. The QQQ, at the skin of its teeth, cranked out a close back above the mean on Friday. So one close is a step in the right direction. But we don't have the two official closes just yet. Then as far as the volatility index, I think in the short term, much easier to be long the market. If we could get the VIX maybe pulling back towards the daily 50. So for what it's worth, guys, the VIX is still pretty sketchy here. This morning, we're back above the daily 21. We don't have any lower time frame sell signals. Nothing really suggesting that the VIX is dying from the inside out. And we're still pumping out that buy signal here on the daily chart. So short term, if the VIX could kind of wiggle its way on down towards that 50, I think that offers the market a bit more of a green light to trade higher in the short term. But of course, if the VIX starts getting spunky here and we're popping back towards 32, 33, 34, well, then at that point, very likely down goes the market. So frankly, guys, I can't look at the VIX and say, we're out of the woods just yet and we should get long and hit the beach. The trend, the structure, the signals, the squeeze, all remains pretty bullish. So keep a really close eye on the VIX. I would say no major changes just yet. All right, moving on to HYG. Yo, junk bonds. Frankly, not too many changes here either. So what I would want to see here from the pair, VIX and HYG, let's cancel out all the buy signals on VIX. Let's get it cracking down towards that daily 50. And then as far as HYG, you want two closes back above that daily 21. Really, I think you want closes back above previous support around 73 bucks. And for now, guys, we got neither of those. So HYG, I wouldn't say has changed too much just yet. And then, of course, you got the beast, the US dollar. And honestly, not too many changes here either. The trend remains bullish. You've got your daily squeeze. We are hanging out around that 21 EMA. The only observation for now, we don't have any buy signals left. So the last time the dollar went full neutral on the big three indicator, that was back here in early August. Ironically, before it made its next huge rip towards the upside. So let's keep it simple. And I don't think it'll happen today. Potentially, it might not even happen this week. But to keep things simple here, as far as the dollar goes, if you're bullish on the market, you're looking to get long SPY, QQQ, ideally you want to see this daily squeeze fire short. Fire short, take out the 50, really put a knife in that uptrend. Could be pretty helpful for the market. If instead the dollar fires that squeeze to the upside in the direction of trend, which for now I would think is probably a bit more likely. This daily squeeze fired long. This daily squeeze fired long. That daily squeeze fired long. It's got a thing for firing these squeezes to the upside. So as far as the pieces of the puzzle, not too many changes, guys, right? I can't look at the dollar and say, yeah, we're out of the woods. Time to get long and go hit the beach for a few days. That'd all look a bit more like the dollar, down here under 110. We are not there just yet. The volatility index, no major changes. So you got a big push. You're pulling back towards your 21. You're hanging out towards the mean. You're hanging out near the mean, and you still got those daily buy signals. That can all lead to a pretty big pop. So no changes there. And then HYG still sporting a daily sell signal under 73. So we got to keep a really close eye on these things. Now, as far as the market goes, and we looked at all the buy signals on the futures, but the cash products, QQQ, SPX, they've actually got a couple lower time frame buy signals as well. SPX, you got 15 and 5. Not much, guys, but it's something. QQQ, you've got a 5-minute. So the whole theme of this week is, okay, what they were able to accomplish last week mainly was a lot of progress to the structure of the lower time frames. Meaning the 5-minute dart, you're in an uptrend. You're back above your 50, you're back above the 21, you get the positive cross, and now you got some buy signals. So that's trend, guys. Big rip to the upside. You put in your high, you dip, you put in a higher low, you put in a higher high, you put in a higher low, you put in a higher high, you put in a higher low. That's trend. So when the monthly chart looks like this, sketchy monthly chart, when the weekly chart is firing a squeeze short, and when you're in a daily downtrend, the only way you trigger a reversal like you had back here in August is if those lower time frames, your 5, your 15, all the way up to the 1 hour, 2 hour, they have to go into an uptrend. Your lower time frames have to begin to behave like the 5-minute. Improve the structure, hold the dips, higher highs, higher lows. So they fixed up the 5 last week. They fixed up the 15. Positive moving average cross. They fixed up the 30-minute chart. And a quick look here at the hour. They even cleaned up the structure of the hourly chart. So now the key is they got to keep that progress. Keep trending these lower time frames higher. Now for this morning, guys, these are all good signs of progress. Where I do think you might want to be a little bit patient. And we're going to gap up this morning, so this will apply even more in about 30 minutes. We're a little bit overbought. S&Ps are at 3750 as of Friday's close. Your 15-minute 21, all the way down there at 3730. The 30-minute 21, 3714, and the hourly 21's around 3700. So this is where in an overall bearish market, we want to make these observations. We want to make the observations that things are improving, but then what we don't want to do is go out there and get silly. Like, oh my God, a 15-minute buy signal. Let me just jump in and blindly get long, because that can get pretty dangerous. So what I would like to see this morning, doesn't mean it happens, but it would be a lot easier to trade, some sort of dip. Because here's the whole theme of this market, guys. This is the spastic nature of this market. We get a little bit too oversold. So they trap the shorts. They squeeze the shorts. And they usually do that in a pretty crazy fashion. Like 200-point rally out of nowhere. So here's what happens during that rally. 5-minute chart improves the structure, the 15, the 30, maybe even the hourly. But that kind of, let's call it face-ripping strength, it's not sustainable. So we trap the shorts, we squeeze the shorts, you get this big rally, but then we quickly end up like 2 miles above the 15-minute 21, 2 miles above the 30-minute 21. So you always got to wait for that back test. And the theme as of late has been we trap the shorts, we squeeze them, and on the first dip, things totally fall apart. So it's been this big transition from trap the shorts, squeeze them, trap the bulls, squeeze them, over and over and over again. So not any huge changes, I would say, in the VIX, the dollar, HYG. Where there is notable progress, though, is on these lower time frames. So my game plan for the week here, guys, what I'm going to anchor to as far as the over-under, 36.50. I want to try to sell put credit spreads on any dip, probably for Friday's expiration, so long as that dip holds the market above 36.50. My thinking is we take out 36.50, you're giving back all this progress. Back under the hourly 21, back under the hourly 50. A lot of progress goes out the window. So that is the game plan. All short-term thinking. Bigger picture. If we can get the S&Ps to 3,900, 3,950, 4K, that's what sets up the next really good short. So we will see if we can get there. Above 36.50, I think they've got a shot. Under 36.50, I think she goes right on back down. So anchor to those things as always, guys. Imagine by Wednesday afternoon. By Wednesday afternoon, the VIX is at 33. HYG is at $70, and the dollar is ripping towards 114. All right, well, at that point, we probably don't want to be long. So make sure you continue to keep an eye on those things. And then as far as earnings, I believe Google kicks it off. Let me see. The big Google. Excuse me. Yeah, Google tomorrow. Microsoft tomorrow. The stock formerly known as Facebook will be Wednesday. And then you got the big dogs. Amazon, Thursday, the 27th. Apple, Thursday, the 27th. And that just about does it, guys, for earnings that I would personally care about. Of course, we had Netflix. Big ol' ripperoo. I think Netflix might be gunning for 300 here. Of course, we had Tesla. Left a little bit to be desired if you're bullish Tesla. And it looks like it's going to gap down about $6 this morning. And then, of course, we had Snapchat. Just a casual 25% haircut last Friday. So keep an eye on your VIXs, keep an eye on your dollars, your HYGs. Be mindful of earnings. Be mindful of all the chatter from the Fed that we're going to get this week. But then look at the market through the lens of, can they keep the progress they've made? And I'm anchoring to 36.50 as the big level. Above 36.50, I think potentially they got the shot to try to take the market higher. Under 36.50, well, it all becomes a big fat short again. So that's all I got for you guys this morning. For open positions, I'm long LNG, which is an energy stock. So we got some call debit spreads here, looking for a push towards 180, 185. We got that trade. I'm trying to think what else we got. We got some iron condors on the SPX. Let's see. We need SPX to close at or below 3,800 today. So that might get a little bit spicy. And then we've got a November call credit spread on Apple. But here's what I'm thinking here. I got to do a little bit of math. But right now I've got a November expiration 150 call credit spread. So I got to trade for November. That's going to deliver me a paycheck as long as Apple's under 150. Which of course means if Apple's above 150, I'm not getting a paycheck, I'm getting the opposite. I'm going to owe the market a little bit of cash. So I got to do a little math here. But for those of you in the mastery, what I'm thinking is probably just turn this into an iron fly. In plain English, we got a 150 call credit spread. I'm going to go grab a 150 put credit spread. And if I can make the math work, basically put myself in a position where if we close above 150, it's all kind of a break-even endeavor. And if we close under 150, it's all kind of a break-even endeavor. And then, of course, if lightning strikes, my friends, and we were to close at 150, well, that'd be the home run. So that's what I'm thinking there. But outside of that, guys, I'm going to cut you loose here. Go grab a little bit of Dayquil, and we'll see what the market's got in store for today. For those of you in the gold room, if I missed any questions here this morning, we'll be together for an hour, so I'll make sure to take care of you during the gold room session. But that's about it for this morning, guys. I will be back on Wednesday, hopefully feeling a little bit better. Back with my usual abundance of energy. But for today, focus on your VIXs, focus on your dollars, your HYGs, focus on those lower time frames. The theme as of late has been trap the shorts, squeeze them in such a ferocious fashion that everybody starts getting long and then they dump it. So are we looking at another September or potentially a bit more of an August? Sustainable rally versus whatever we would like to call that. But all right, guys, I'll cut you loose here. Hope you'll have a great day. Always appreciate your time, and I will see y'all soon. Adios.